Thank you, Sherry. That was a fantastic panel. Sherry, Rukaya, Andrew, Mark, thank you very much. And so many points. And, the one that rings true to me is our kids. I can tell you that as a kid born and raised in Oregon, going to public schools, that the environment and the community that my kids got to grow up in is very different from the one I did. And we need to be accountable for them to be able to build a great future that they are more aware of than we are. So thank you for that, and I look forward to more in the future. All right, let's shift gears out of shared prosperity, and we're going to move over to my friend John Tapogna. John is the president of Eco Northwest, and a few months ago, our friends at OBI, Food Northwest, and including the Oregon Business Council, enlisted Eco Northwest to take stock on kind of economic impacts of the pandemic. We need data, we need to understand what's going on, and in order to really inform our future, we've got to learn of what's happening around us right now. So we've asked John to share his findings. I will tell you they are sobering, so I will prepare you for that. But take stock in what he has to say and use it as you think about planning for our future. And right now we need to know where we begin. I'd like to welcome John, and with that such high beat note, I'll turn it over to you to share us with your findings.
All right. Thank you, Joth. So we're going to be stepping through a deck here that looks at three phases: the shutdown, which is a period that ended in early June and that we hopefully don't have to return to; the reopening where we are now and will be until we have a vaccine and have eradicated the virus, and then finally that path to recovery when we ultimately get to really move forward. And so let's step through this deck. Next slide. Starting with some questions. How did the shutdown affect Oregon workers and businesses? We'll keep going. And why don't we go ahead and make these full size here on the screen so folks can see it. You might recall at the December summit, we talked about the Oregon Business Plan success in creating and exceeding the goal of 25,000 jobs a year. In fact, we had created 37,000 jobs a year over the course of the last decade. And as you can see here, in March and April, gave 250,000 plus of those jobs back, essentially 10 years worth of that goal back in the course of a little bit more than a month. And so in essence, what we did very quickly is moved all the way back to mid-2013 in terms of the number of jobs. It's really jaw-dropping to look at. Next slide. To see how that broke out by industry, you shouldn't be surprised. Big disproportionate impacts. What we're looking at here are the continuing unemployment insurance claims in May expressed by the pre-COVID employment in those industries. Big disproportionate impacts in the leisure and hospitality sector. 46% unemployment in essence by that measure. An overall average there you can see at 11% for all non-farm employment. But don't discount all of those other smaller bars. Remember, we were at near historic lows of unemployment coming into this pandemic, 3.5%, and all of those 7, 8s, 9s, 10s, 16s are sizable big unemployment rates. Next slide. In terms of who it hit, disproportionately workers with a high school education or less. The blue bar is looking at the share of those UI initial claims compared to the orange bar, which is the share of the total labor force. So big disproportionate impacts, and not surprising given that high concentration in the leisure and hospitality sector. Next slide. We also see big disproportionate impacts between the ages of 20 and 34. So again, those UI claims in higher proportions than share of the labor force. I will add here too, going back to Sherry's point, I don't have a chart on gender, but big disproportionate impacts on women as well. Next slide, we'll take a look at race and ethnicity. And if you glance at this quickly, you might say, well, you know, these come in relatively close by race and ethnicity, but focus for a moment on Black and Native Americans. In the case of Black Oregonians, they represent 2% of the labor force, but 3% of the UI claims. That's a 1 percentage point difference, but that's 50% bigger. So we can't dismiss that. We've got to focus. And then, a doubling with respect to Native Americans. Next slide. What did Congress do? Unprecedented stimulus. This chart is looking at different forms of income and how they have changed since 2007 year over year. And so those sort of red areas are wages and salaries. The green are proprietors and investment income changes. Then you get the employer benefits in blue and how those have changed over time. And then finally, you get to this goldenrod color of government transfers. So take a look at that as you get to the right-hand side of this chart in that first quarter of 2020. The biggest disaster relief stimulus package in the history of the United States. $3 trillion in a variety of forms. You are familiar with the $1,200 checks. A big, robust play on small businesses through the Paycheck Protection Program, the $600 a week unemployment benefit add-on by the federal government, and then big assistance to airlines, cruise ships, tax relief for bigger businesses, and some relief to state government to reimburse their costs for fighting the coronavirus. We are in a very interesting time at this moment because that money and many aspects of it are winding down this week. And all eyes are on Capitol Hill because this pandemic clearly isn't over. Unemployment is still in double digits, and folks are going to be in trouble and struggling with rent if some assistance in it isn't on its way. So next slide, we'll take a look. That was mainly the story of that shutdown period. So how bad were things when things were bad? Now we're going to take a peek at how the economy has performed in these initial weeks of the reopening. So, first, second week of June, things started to open up a little earlier in other parts of the country than in Oregon. How have things gone? So let's take a look at this next slide. You can see this is from our friends at Opportunity Insights, a Harvard-based think tank that the Oregon business community actually has a direct relationship with, but they started to put out some real-time indicators. And you can see we peaked higher on unemployment in May, up there around 17%, higher than the nation, but then have gradually come down. And, I'm going to say we're a little bit lower. We'll see how that plays out statistically as the weeks move on. Next slide. Similar story here with respect to consumer spending. So they have some real-time indicators here where they're looking at consumer spending relative to sort of the mid-January 2020 index level. You can see it plummet, down more than a third, both in the U.S. and in Oregon in the beginning of April, and then coming back more quickly overall for the U.S. than it did in Oregon. But you can see, sort of like that unemployment chart, we've sort of caught up. There's a little bit of a tortoise and a hare story going on here, and we'll see that play out in this next slide as well. One of the main differences between our spending and the nation's is that we've lagged some in this area of restaurant and hotel spending. So we're still down a little over 40% relative to January, whereas the overall U.S. average is down a little bit less than a third. And you will see that a number of states sort of rushed out of the gate. We'll go to this next slide. A number of states rushed out of the gate and sort of drove that U.S. rebound. I picked out three that have struggled: Florida, Texas, and Arizona. Well documented on their outbreaks. They did come back. They opened their economies. They got back into some restaurant, in dining experiences, et cetera, and they hit those outbreaks. And you can see what happened to the consumer spending. It hit the brakes. It is, rebounded in the last week. But the point to make here is an important one, that, there are two ways to slow this economy down. One is through regulatory action where government comes in and basically says, these industries cannot operate, we're going to close it down. The other way is for the virus to get out of control and for consumers to basically act on their own and say, look, the environment doesn't look safe, and so I'm not going out the front door anymore, and I'm certainly not going to go into crowded spaces and hang out with other people. So that psychology is a very important one. And, going forward, if we want to win this reopening, we're going to have to figure out how to dance with this virus and take what we can get from it, but not overdo it as they did in Florida, Texas, and Arizona. So that's that slide. We'll now transition to the, what's the outlook for the rest of 2020 and beyond. We'll go ahead and take a peek and see what the Federal Reserve thought back in June. So again, remember, we're almost halfway through the year, and the Federal Reserve is making these projections. These are projections of unemployment rates for 2020, 2021, 2022. You can see in that red line, as of June 10th, was sort of their point estimate for where they thought unemployment was going to end up for the year 2020. That ends up at about 9.8%, but look at that range. They're saying, they're almost halfway through the year when they say it, that the unemployment could be almost as high as 14% or as low as 7.5%. A pretty remarkable range of uncertainty there, given that they were making that projection almost halfway through the year. And then you can see, continued elevated unemployment expectations into 2021, and even above trend there in 2022. So it's going to be a long haul out of this pandemic. So now some takeaways, and we have 4 of them. The first one is the virus is calling the shots. Control this pandemic and the economy will grow. Lose control of the pandemic and the economy will contract. That's a simple one. If you've got one message to take away from this presentation, take that one. Next slide. The CARES Act. It's the largest stimulus package in the history of the United States. Bigger than the New Deal, bigger than the relief package of the Great Recession. It was designed around an expectation of a V-shaped recovery that is not playing out. Key features of that act are going to expire this week. How Congress's acts now could spell the difference between, a check mark recovery, as Josh Lerner at the state has described it, versus a W-shaped double dip. If it doesn't come to the aid, prop up vulnerable families. Next slide. The pandemic has exacerbated labor market inequities, and job losses are disproportionately concentrated among people of color and younger workers. Sherry just made that point. We are in it, and so, in order to move forward on this vision of shared prosperity, we've got our work cut out for us, because this pandemic and the recession that came with it has done no favors. And number 4, pre-existing trends in automation and technology have accelerated. This is the point that Rakaya made. A successful recovery strategy must look at new ways, the new ways that we're going to live, learn, and work. There are manifold different impacts here. And so this is the perfect time to be sitting down as a community, thinking not only about what we need to be doing on this reopening period, but also thinking ahead to 2023 to 20, and saying, what is the world is going to look, what is it going to look like? How do we react, and how do we put Oregon in the best position to thrive? So with that, it's a big charge, Joth, but I'll turn it back to you.